Greetings, Jedi traders. David here of TradingFibs.com to bring you the market outlook and recap for the week finishing up February 12th, 2015, as we lead into the third week in February. U.S. holiday on Monday, February 15th, being President's Day. Market set to open up here in a couple hours. Today's Sunday, February 14th, Valentine's Day. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Hey, 6 weeks into the year, 5 days of volatility and flatness written all over it. Be that as it may, Janet Yellen testimony on Wednesday and Thursday. Price session overnight, gapping down, never going higher. Made it very tough, especially for those intraday trend traders. Finding pockets of opportunity sometimes means waiting for the setup until everything looks perfect, and then the trade does a 180 on you. Yes, that did occur. Most probably the core reason for the majority of losses this week. However, when the trend did run this week, it made up quite substantially for any of the losses, and continuing with the same premise of last week's strategy of leaving two contracts on to the projection level paid off. After Thursday's down session, Friday Globex was in the green, closing out the gap from Wednesday's price action downside. Clearly wasn't the runaway train type of day, and so ending the week on, oh no, great finish. But knowing that I was able to find pockets and trend on a volatile and very much inside value week of trading. Please make sure you stop by at TradingFibs.com and check out the trading session focus again for the week on the TF Russell as we roll into the YM this week, being in a trading room, making sure everybody's covered, giving everybody a fair chance. We rotate each week, even though all 4 plus crude is up on the screen share. Being able to spend 1 week learning the behaviors in and outs of the index helps. Here we can see again futures and market cap leaders, the recap that will be posted. Make sure you check out each weekly futures and market caps analysis as we go through the market for this last week. Starting on looking at volume profiles, we see across the board again that intraday, just trying to find the pockets. Not bad market structure. 70% of volume represented by the orange, pink line, the point of control, and the purple being the outside the value areas. When you have price action above and below, gives that bell curve with a point of control. The mean makes for good structure. Anything else usually needs to be repaired, and that is exactly what the price action did. Monday and Tuesday's price action almost a twin of one another here on the TF Russell, the NQ, the ES. Here we can see YM holding at the point of control, 15,916. Point of control is another way that I look at them as price action retreating to the point of control. Price action holding intraday at the point of control means holding off sometimes from an intraday, or trading outside of value area usually is will tend to be a momentum move. So again, something that I tend to look at every day on my charts, just as much as I pay note to the 25-minute open range, but also paying notice to where are the open points of control. As the market is run down, we obviously have been leaving numerous points of control. 1140.3, the 600-day major VPOC here on the TF Russell, as the YM sitting right at it now, 15,916. It's the NQ that has the majority of work still to the downside, all the way down to 34.3275. Here on crude, price action again still continuing downside and bouncing back up on Friday with rumors that OPEC going to go ahead and cut production. Let's jump right into the market profile here. Let's start with the TF Russells. We can see price action opening up for the week 973.8. Those Monday, Tuesday intraday sessions for the most part. Gapping down on Thursday, closing upside. Not much of a gain for the week. Closing out the former gaps at 958.5, 961.5, represented by the dashed dotted line here. We still now have an open gap downside at 951.8. Jumping into the YM, again, very similar price structure for the week. gapping down on Thursday, leaving an open gap here at 15,614. Not much of a gain for the week. 15,935 opening price to 15,916. Again, open gaps closed out all across the board. Nothing still yet to the downside except that 15,614. Take a look at the market profile on the NQ. A little bit more of a gain for the week as we opened up downside, finishing upside at 4,625. But it's the NQ, if you recall from the volume profile, that still has a lot of repair down below. Price action lifting up on Wednesday. Janet Yellen testimony Wednesday and Thursday. Price action downside and closing up on Friday. Oops. Take a look at the market profile on the ES. As we can see, price action to the side here on Monday and Tuesday, lifting on Wednesday. Yellen testimony, price action gap right there, 1847. As we set downside on Thursday, leaving this open gap here, closing it on Friday. Look how many open gaps were closed out just on Friday session alone. Wednesday and Friday session there. We opened up the week at 1851.50 and closed upside at 1859. Market profile, and I believe we still have an open gap downside below at 1825 as well. Market profile on the crude here, as we can see, price action opening up the week at 30.23, closing downside at 29.02. A little bit of a lift here on EIA report. Petroleum, very good, as we found inventories not to be as high as they thought it would be. Daily gaps closed out, but we sit down here at 27.32. Plenty of room to move upside. So let's jump into the big picture as we'll start out together with the crude. Now, one of the things we're going to do here, as I promised last week, we're going to tie in the futures indices together with the ETFs as well. So we'll be looking at IWM, Diamonds, Triple Q. We'll be looking at the Euro and Gold and USO. And then to wrap it up, we'll be looking at market cap leaders as well. So something new, we're starting with the trading fibs strategy. So pretty excited about that. So here we go. Looking ahead and looking behind. First, looking behind the crude, we know big picture as we look at the row at the bottom, the weekly here, the monthly, all to the downside, still holding below key moving averages. Again, if this is the first time you're watching this video, what are we looking at? We are looking at a 75-tick range chart. So the upper two left-hand charts are represented by what I call the Globex in the intraday momentum. Now, setups are not taken on this chart, as setups are taken on a different template. But again, when the bigger picture, bigger time frame is showing that we're in the green, it makes that much higher probability that the trade on the intraday session might go in that direction. Not necessarily. You still wait for the setup. If I was a swing trader looking for options, I would also pay heed to the upper two charts here, as well as to the key 4-hour chart, which I pay particular attention to, as crude now rejecting at the 50-period moving average. If I'm looking for a trend change here, then I'm looking for price action to break above that 144, even though I won't have the crossover. Here you can see crude rejected at the 144 and just followed through to the downside. So again, key decision time whether crude continues upside, breaks the 144, or rallies above. However, for now, crude's still sitting to the downside as we did break up above the 5 SMA here. But for the short term, we are in a bull as we head into this week. But again, key lines to watch here are the 50 and the 144 period moving average. Jumping into the TF here, Russell, again, not an easy week. A lot of intraday chops, especially in the early morning sessions, gave rise to a couple of pockets of opportunity. We're finishing up in the green to the upside on a 50-tick range chart here. Again, the 4-hour chart in the green. Again, closing out former open gaps. Still leaving some holes. We still have holes above here. When do we grab those? Well, we got to get above, that's right, that 50-period moving average. Got to break above that 144 to carry that momentum upside. So again, bigger picture still remaining quite bearish, but at least the intraday showing a rally. On the TF Russell, what are we looking for every day? Well, we're looking for moves like this. T3 moving averages crossing over. That's right, T3 moving averages crossing over to the upside. with all or as many charts in sync to whatever level you're watching. Globex high, it doesn't matter. AD line, market momentum to the upside, and price action holding above the 51.44. So when you look at the TF Russell and then you look at intraday picture, if we got, this is from Friday's price action. So if you go back to the setup here on the TF Russell where the big picture is in the green, even though the big picture is still in the red, does that mean you wait? No. It means you find the pocket to set up and you take the entry when all four charts are in sync. Heiken Ashi bars to keep you in trend, whether it's the big picture or intraday, it doesn't matter. It's the same strategy. And there you are, holding above. Couldn't be more beautiful than the pre-session on the TF Russell. Look at that. That is a gold standard. That's what you print and you put up in front of you every day. That is what I'm looking for. Ain't that a beaut? Pre-market session. Price action holding above the 13, the 50, and the 144. Again, the 13 EMA is something I've been playing with most recently as the market is set here to open. I apologize for that. All right. Anyway, rolling into the YM picture again, moving downside during the week. Let's go ahead and we'll disconnect from the service. There we go. All right, price action moving downside here, lifting back upside on Friday's price action. There we go, price action to the upside. As we can see, the open gap up here above. But again, the big picture still remains to the downside as here we reject right at the 50 period moving average and key decision time here on the YM as we're right at the 50 and moving towards the 144. So again, the intraday setup might be there in the green, but the bigger picture right now still to the downside. As we lead into this week, we really need to get above that 144 to show any momentum here. Taking a look at the NQ rolling into next week. Again, not an easy week on the NQ as well. Beginning of the week showing a lot of chop in the session. Again, we had a nice downtrend, but a lot of chop for the that was Friday session. Again, leading into the week, a lot of chop. And then we dropped down on Thursday, lifting on Friday. So we're now in the green leading into next week. Again, the overnight session never indicative of what will happen in the U.S. session. But if I'm in the green here and I got price action breaking above the 50, I'm watching for that 144. True rally in this market, guys, is going to come above that 144 EMA. So again, where did we hit on the NQ? We went all the way down to the 824.15 low here, back from August. Scroll all the way back for you to see if I can get back there or not. All right, so there it was, 824.15 low. And price action for the most part still sitting to the downside. All right, so again, it's the big picture is we know it's downside. We know the trend's been in a sell-off for some time now. But right now, if you're even in a downtrend, we're always looking for pockets of rally. So price action here, this is what I look first to. I look to the higher time frame, 75 tick and a 4-hour chart on a T3 moving average. I want to see where price action is in regards to the 50. So NQ with numerous times hitting that 50 but unable to really break above and hold, that has me a little concerned. So it's going to take for the Globex session, again, Monday going to be low volume. As we roll into Tuesday, I'll evaluate where's price action between the 50 and the 144. And I'll see where price action then is in regards to the higher time frames of where the probability might be. But again, I will only trade the chart that's in front of me. Moving into the ES, price action, similar picture. As we've crossed upside on Friday's session, again, we're right back at the 50 period moving average. Need to cross above that. Watch that 144. Price action closing above the 5 SMA. So a couple of indicators in the green here, but T3 moving averages still holding downside on a daily, a weekly, and a monthly. So technical momentum still shifting to the downside, but I need something that's a little bit shorter term, and that's where I use the 4-hour and the 100-tick range chart on the ES. Now, if you're trading the ETFs, we'll show you here in a moment how you can do that as well. All right, wanted to show you one other chart from this week's setup. Taking a look at the crude here. As you can see, price action on the crude. Let's go ahead and zoom down a little bit for you. Very nice trade this week on the crude. I believe this might have been after the EIA report. That's what we're looking for as well. Solid Heikin Ashi bars. There it is, all in the red. Takes a lot of patience, Jedi traders, to wait for trades like that. So, big picture, again, you want to make sure each week you check out my blog or my posts. You can go to Stock Twits here. As you see, every day I got post a technical bias with open gaps for each regular trading session from pre-market to Globex short-term and long-term, and also posting the major open gaps. All right, as promised, before we get there to the market cap leaders, let's just run through the ETFs. Again, similar pictures when we're talking about the futures, and I have a prime example for you here as well on the euro. All right, IWM on a 100-tick range chart. We can go to a, let's go to a 30-day 50-tick range chart, as that will match the future indices that we were just looking at right there. 50-tick range chart. We can see IWM finishing on Friday in the green. 4-hour chart still remains downside. 4-hour chart on the IWM still downside. Monthly downside, weekly downside. See no difference between that and the futures. Here's the IWM on a daily, still holding 50. So the big picture is still to the downside. Upper two charts here, those starting to show some momentum. So when on the IWM we get above those moving averages, futures also following through, will be all in the green. Take a look at the diamonds. Diamonds here on a 50-tick range chart. Again, we saw Friday's price action on the diamonds holding to the upside in the green. Also here on a 4-hour chart, we're starting to move upside. Still, look at the rejection there, whether you're trading the futures or the ETFs or the options for that matter. Price action still rejecting downside, monthly downside, weekly downside, and the daily picture on the TF still to the, on the diamond still to the downside. Market set to open up here in less than half hour. Moving over to the triple Q. Triple Q, again, similar picture. We got a lift on Friday's action. Again, if you're trading the ETF, you're looking for price action to be in the green here. You're looking for price action to break above that 4-hour, which might just happen. And price action, though, on a daily still holding to the downside. So I want to see what happens as the triple Q moves up to the 50. We definitely know that we're in a downside. So if you want to get short on the ETF, you look for price action just like we did here last week on Friday on the ETF. Is you want to see the crossover here on the 50-tick range chart, which should be synonymous and in conjunction with the 4-hour chart, which is in alignment with the rest. And the ability here, I'll show you in a minute, if you're looking to trade the intraday on perhaps one of the market cap leaders, also possible with the T3 trading strategy. All right, let's move into the SPY, the ES. As we can see here, price action on the ES also got a lift on Friday as price action lifted. Trend change to the upside here in the green. 4-hour chart just starting to break upside. We want that 50 to be a 144 to show any signs of rally. And here we go. We're still 50 under the 144. So we got red, 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 red all across the board. But showing a slight trend change here. Got to get that 5 above that 10 to show somewhat of a rally here. Now I'll show you a great example of what we're looking for as we've been looking here on some of the other indices, but here it is. Here we are in the euro as market action this last week has been jumping upside in the green, 50 holding above the 144. That's a mistake on my charting here. That should be T35 should be upside. Well, actually it's downside. It's showing red right now. I apologize. That's the reason for the red. But the background is green because the T35 is holding above. There we are in a 4-hour chart on the 5144 holding above. Big picture above, big picture above. We know the euro doing the opposite of the U.S. markets, but this is exactly what you're looking for. Look at all that indecision. Can't break above the 50, but finally price action breaking above 144 puts you into the trade to the upside on the ETF. As we'll roll over here into the market cap leaders in a minute or two, you'll see we're looking for exactly the same thing. Gold, we know. GLD, that's right. Gold's been in a nice move to the upside. 50-tick range chart, holding to the upside. 4-hour chart here. You might go to a 100-tick range chart. Is this a lot of volume here? All right, gold holding to the upside. Price action, T3 moving averages holding upside, 4-hour chart. So the outlook for this to continue upside, you'll monitor the 100 tick, the 4-hour chart, and then watch the intraday session. Again, the whole idea is not to maybe jump in the middle of this, but to watch for the crossover and watch for the pullback, especially on a 4-hour chart. That would be, it's all about timing, right there, Jedi traders. It's about timing. So again, I wouldn't necessarily jump in right here unless I was watching an intraday screen. If I was watching to hold this a little bit longer, I would have wanted to enter on the crossover for gold was back here on January 20th. All right, last one, following up on USO, as we saw the crude futures here holding downside on a 100 tick range chart. We know price action here on a 4-hour chart to the downside. If we go to a 50 tick range chart, I believe we had a little bit of lift on Friday. Nope. Yeah, there it is, that little lift at the end, but still T3 moving averages holding downside on a 50 tick range chart. 4-hour charts downside. I think you know the picture on crude. But crude doing the same thing, reject at the 50, not being able to break upside. Until we do that, no signs of a rally yet. Now, you looking to trade any of these intraday? Very possible. Here we could see as we roll into Facebook, taking a look at Facebook on a 50 tick range chart. See the same thing crossing over. You have T3 moving averages, Heikin-Ashi bars to the downside, a little bit higher time frame. We're looking at Facebook on a 100 or 200 tick range chart. We have a 75 tick chart or a 100 tick chart here at the bottom. All right, there we go. So we're in the red here. We're in the red on a little bit higher time frame, and we're watching our 1-minute chart. So that puts us into the short on a Facebook trade after we reject off the 50-period moving average, and there you are to the downside. Whether or not you're trading this, similar strategy, same strategy, just a little bit different time frame. All right, but let's get into the big picture of where Facebook is right now. Facebook on a 200 tick range chart, a little bit bigger time frame. Currently, we can see across the board, for the most part, we're in the green. Weekly and monthly are upside, daily upside in this quasi in between the gap 5144, so no direction. This is decision time on Facebook, so I'm watching the 200 tick in the 4-hour chart. If price action cannot break above and we go back below the 50 on this and we're back in the red here, then it's all downside for Facebook. Again, we're going to watch the 4-hour chart here on the 5144. If we break the 144 downside, so right now I wouldn't do anything on Facebook. Let's jump right into Netflix. Next market cap leader is Netflix. I would use a 300 tick range chart when I look at Netflix. Let's go to 90 days. And we'll go to 300 ticks as we take a look at Netflix. Netflix, again, kind of going in sync with the market right now, but T3 moving averages flipped upside on Friday. Again, breaking above the 5144. We got a ways to get upside, but again, the big picture on Netflix has been monthly, but we're showing some signs of weakness here. Solid Heikin-Ashi bar downside on monthly. Weekly, we've definitely been downside. So there's a trend change. And then price action, here we are tapping almost the low that we had back here in October. So be careful, watch that. So if this is, I apologize. Let's go back. That was back there. That was back then. Let's get a move a little forward here. We've already met that resistance. All right, here we are. This is what I was looking for. So the breakdown here. All right, so again, you can go to a recent low to see whether there was support there or not. But right now, with price action flowing through on the weekly and the daily crossing downside, if you're looking for the short on Netflix, I would wait until the T3 moving average is crossed over again downside. Watch for the 4-hour chart to be back downside, and then watch for the intraday entry on a smaller time frame. All right, moving to Amazon. Amazon, I would use an intraday. I would go to a 500 tick range chart, 90 days, 500 ticks. Let's go ahead and set that up. There we go. Price action again on Amazon in the green. T3 moving average is a little bit downside on a 500 tick range chart, but 5 still holding above the 34. Again, the big picture here is we're downside. It's this 4-hour, the daily chart that I see holding to the downside, but it's the 4-hour chart still way under the 5144. So the technical momentum on Amazon to the downside. So where I show still support upside on a monthly, weekly's downside, daily's downside, but 50 hasn't crossed below the 144 on the daily. So you want to watch that. But the 4-hour chart is downside. So if you're looking for the Amazon entry to the downside, watch the 4-hour chart get below on a T3 moving average, and then watch your 500-tick range chart to get back in the red, just like you had here in the first week and a half of February. Taking a look now at Google, last 3, rounding it up. Google I would use a 1,000 tick range chart, 90 days, 1,000 ticks. As we can see, price action on Google finding support here at the 144. And we can see price action here holding now in the red on Google. T3 moving averages all in the red. T3 moving averages on a 4-hour chart. We got one red, one green, showing a little bit of a change trend. But 4-hour chart now sitting downside, not looking good for Google right now. But the key line right here, that's it. That key line will be right here. Price action falls below that 144, then Google is going to be in the red for a little bit. Moving over to Apple as we move into this week's session. Again, Apple coming out with a new product on their iPhone, I believe in their tablets. Still in the red, a little bit of reject here at the 144. But again, the big picture on Apple has been all downside. If you're looking for a rally, we're just not there. I know everybody fishing for a low, but we're just not there yet. Again, I'd want to see at least price action up here in the green to get back into the green on Apple. Want to see price action on a 4-hour chart back above the 50, and then the daily, at least the daily, to show some Heikin-Ashi bars in the green, pushing upwards above the 50. I know the weekly and the monthly is going to take some time to break that upside, but that's the only way that I'm going to see this moving back upside. All right, wrapping it up with Starbucks here. Starbucks also, I would go down to a 200-tick range chart on Starbucks. So we'll go down to 90 days, follow through on a 200 range chart, and there we go. Starbucks still in the red here, following almost the market trend. Price action on a 4-hour chart, just starting to break upside. We got a green and a red here. Price action trying to get back up to that 50. So right now the big picture on Starbucks, even though on a weekly downside, the crossover not here on the T3 moving averages, but price action is below the 51.44, so that has me a little concerned right there. If I can't break above that 51.44, and I'm still showing red up here on the 200 tick and the 4-hour chart, and on both of these charts up here, Starbucks not in any form of rally in the next couple of days. All right, looking ahead in this week's session, again, make sure you check out the technical bias and key open gaps for each week. A little bit of a shortened trading session this week as we lead into no trading on Friday. Markets are closed. Limited session on the futures, but with Fed speakers up, the market still really doesn't know what to do with all this indecision about rate hikes and negative rate hikes over in Japan, etc. So right now, Fed minutes or FOMC minutes. Let me make sure I have my dates correctly here. Let's go to February 15th. Yes, U.S. holidays. There we are. So FOMC minutes on Wednesday from the previous meeting. We have EIA. Watch that EIA report on Thursday. That seems to be a mover. And then we have jobless claims, which, hey, they're just watching the economic data every day for what their next decision in the market and what that will be. Again, make sure you check out my trading website. Again, 2 shout-outs for some other websites you guys should check out. Jason Kelly, for anybody interested in long-term holdings. Again, you can complement the moving averages with his 3-sig tool. Great way to invest. I follow some of this stuff for my long-term not projection, but long-term hold, so I think you should check him out. His newsletter is everything worth it, but if not, you don't want to be a follower of his newsletter, at least get his book, the 3% Signal Method. I think you guys will like that a lot. Also, a shout out to Heikin-Ashi, since I use Heikin-Ashi bars. Great newsletter that comes out each week. The EducoFin, EducoFin. Make sure you check that out as well. Sign up for his new newsletter, Heikin-Ashi newsletter, and you can go ahead and maybe supplement that into your trading plan as well. Again, each week, what are we looking for? That's right, we're looking for that beautiful setup where price action on all 4 charts. That means a lot of patience, guys, but hey, from 960.8 up to 960.8.5 on two contracts. Nothing to be ashamed about that. All right. That concludes an insight into the state of the indices, the outlook, and the recap. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra: one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs. As always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Have yourselves a blue zone remainder of the weekend. Have a great day off. Market set to open up here. European markets. Remember, the Chinese markets will now be open, so we might get a little bit of action. So be careful out there. A little bit of volume on Monday. Go ahead, take the day off. Be with your family and friends. Have yourselves a good day, a good night, and good trading.